Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with soon-to-be on Bob Iacchino. Going to bring him on quickly. Big storms in Florida. That is a shocker. Real quick. Hello, George. Hello, Josh. Hello, Davey. Good afternoon, Amit. Hello, Patrick. So, just a quick recap. We already went over all the numbers that came out with GDP. We'll get Bob's take on anything he wants to talk about with that. Kansas City Fed composite index, pretty big drop, but still above zero. But manufacturing, huge drop below zero. Remember, Jackson Hole still going on tonight. Tomorrow, remember, we'll get also Bob's thoughts. We got PCE, everything PCE, and then starting at 9 a.m., Powell speaking from Jackson Hole, and you have consumer sentiment final numbers. All right. By the way, those PCE numbers are coming out at 1 hour before the open, 7:30 Central. Pretty green day today. Those doubles continued to work rather nicely. Nice push higher. 65% roughly for the 75 basis point, 50%. 35% for the 50 basis point, back to neutral gamma. So on a continued rally, we go into positive gamma, which is volatility damping. Dealers sell into rallies. Well, actually, if you dip, though, we actually get potential selling into dips because it does drop into negative gamma again. After the close today, firm was down. So that's what I checked in on, and then nothing tomorrow. By the way, the Peloton price action was absolutely bizarre with their major miss. But, then a workday. Workday, that's another thing I did peek at. All right, with that, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer-term subscribers, leave some comments like you've been doing, and come back to like the videos. Hello, Options 22. Put down the Kool-Aid, George. We're not all-time highs from here. With that, Magic Bob button. Bob. Storm-ridden Bob.
So it's always new all-time highs from here.
It's always market only goes up. Duh.
Well, I don't even mean that. I mean, if you're going to get to new all-time highs, it's always going to be from here. That statement will never change. Every single day you can say it and it will always be true. As long as you don't say it has to be from here right this second and not drop tomorrow.
It couldn't be that from there?
Well, that once you get there, you're here. So, all right, let's talk really quick because, again, there's storms. My power's been going in and out, so if I disappear, I apologize. If there are any questions for me, pump them out as quickly as you can in case you guys lose me. I might be here the whole time. So Germany beat on GDP. I thought that was significant given that the inflation readings for Germany and the UK are double digits from here. UK is already in double digits. And Germany seems to me like they might be pumping some stuff out until they're in a full-on energy crisis because, remember, GDP does include inventories. So companies may actually be building up inventories for the coming winter energy crisis when they'll be forced to not necessarily run factories, manufacturing plants because they can't heat them. They won't be allowed to heat them. So I think that's what got us such a big beat on Germany. The IFO business climate in Germany, the headline read reading was good, but the future conditions was bad. So ECB monetary policy meeting, we got nothing. Average hourly work week in Canada was up by 1% year over year. So again, those percentage numbers, and that brings us to US GDP, which was revised better. If you guys were here yesterday, I happened to be here yesterday. I said that if it was revised better, I think they're going to try and turn it positive by the next two revisions. Expected to go from minus 0.9 to minus 0.8. It went to minus 0.6. That was the headline quarter over quarter. Sorry, there was actually 1.6. So they cut it quite a bit from that 0.9 last reading to 0.6. And of course, the previous quarter was down 1.6. Continuing claims was better than expected again. And initial was better than expected again. And continuing claims improved. The big thing that stuck out to me was GDP price index, which was up 9%. It was expected at 8.7. It was last of 8.3. So that's the part of the GDP number that was not good for the markets. Now, the market just looked at the headline. Yields fell today. We saw yields drop across the curve. We saw the 2s, 10s yield curve spread go further into inversion. Again, I don't really care. The Jackson Hole Symposium. So the first critical speaker was, of course, the host or hostess, if you want to be sexist, of the conference, which was Esther George. She's retiring, and it seems like she wants to be a little bit more straightforward because this is her last year serving. She's retiring in January. And I watched most of the interview, and it struck me as very interesting that she said why she voted against the 75 basis point rate hike in June, but yet fell into line at the next meeting. She was the only dissenter in the June meeting for 75 basis points. And then the following meeting, the July meeting, it was unanimous for another 75. And she said she feels like a quick switch of policy is wrong. It's incorrect. She doesn't think that they should be doing that, just flipping policies like that. I took that as very interesting because if for some reason the Fed wants to drop off to 25 basis points quickly, she would likely dissent for that. The second thing she said was, and she wasn't specific about this, she said that, she thinks that more moderate is probably good for the next meeting, but if the data proved out that 75 basis points was the best path, she would vote for that. Now, remember, she was a dove. I'm sorry, she wasn't necessarily a dove because she voted against 75. She just thought the abrupt flip in policy was not a good thing. She also thought it was interesting that 50 basis points was going to be considered dovish, considering that we've only had 3 moves of 50 prior to this and 2 moves of 75 in history. She goes, I think we're talking about 50 or 75 and we're considered dovish. That led a lot of people to say that the Fed is going to talk hawkish and act dovish. 50 basis points is dovish. I don't know. That sounds weird when she put it that way. But it struck me that the PCE numbers are really, 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 really important tomorrow, as is the one more CPI that they're going to get and the non-farm payrolls number that they're going to get prior to the September meeting. Again, she's not the most influential voting member, especially since she's retiring, but I think she was very straightforward because she's retiring. So she is open to 75. I thought that was interesting. I thought that was something we should know. I think, so to Josh's question, I think if he's not what we would consider to be overly hawkish, it's going to be considered dovish. So let me explain that. Everyone of note, except for all the YouTube people who do the low float IPOs, is saying that the Fed is going to be really, really hawkish tomorrow, and they need to be really, really hawkish tomorrow. So that means to me that if he's even the slightest bit balanced, it'll be taken as hawkish. And I think that's a mistake because I'm starting to fall more and more into the 75 basis point camp. There is data that's slowing. There's a lot of it. But Neil Kashkari was dovish, said they need to keep fighting inflation. Esther George voted against the first 75 basis point cut, said that they shouldn't pivot policy that quickly. Also said she'd be open to 75. Again, she's not necessarily dovish. So I think the PCE tomorrow is kind of critical to the market overall, Josh. That's honestly what I think. And if you look at the estimates for PCE, the core year over year is expected to be 4.7, slightly lower than the 4.8 of the last reading. The headline is expected to be about 6.5. I know we don't have one here, but that's what I've seen on Bloomberg and other places. It was 6.8 last. Month over month expected to be halved from 0.6 to 0.3. Personal income, 0.6. Personal spending, 0.4. One would be unchanged. One would be lower. Personal spending is inflation adjusted, I believe. I'm going to double check that. I'll come on tomorrow after the PCE numbers if you guys want me to. I'll double check that beforehand as to whether personal spending is inflation adjusted. I think it is, because personal income is naturally inflation adjusted, because we always compare that to real income. So that actually makes me think it's not inflation adjusted. But either way, we saw retail sales, which is not inflation adjusted, fall. So either way, it's probably likely to fall. So from that perspective, I would be very, very worried about the market if any of these key numbers come in a little higher than expected. If we get a 0.4, a 0.5 in the core PCE month over month, if we get a 4.9 in the headline, if we get a personal income number that's 0.9, and by the way, that's where I think the highest probability of a beat is in the personal income number. I'd be very worried about the markets with a strong PCE juxtaposed with Powell's speech. So that's what I think. If he's what Josh and I both would consider to be overly hawkish and PCE numbers are strong, that's actually hawkish, right? If PCE numbers and all that are weak and Powell is just sort of normal hawkish, you probably get a pretty big equity rally and a pretty big drop off in yields.
Kalani says, amazing analysis, Bob. Thank you. Josh agrees with Kalani. Hey, Christoph.
What's up, Christoph? I think about you a lot, bud. What's going on there?
The mindset of the Fed being transparent. Bernanke gives sense that the Fed is the market's friend. They should do a shock and awe 100 basis points.
I think so too. I tweeted that, Mike. I'm sure you saw it. I think so too. They won't. But I'd love to see them do 100 basis points and just punch inflation in the face. And then say, okay, with this 100 basis point rate hike, we're going to leave 25 on the table for next month or for the next meeting and just kind of slow down from there. But they've done away with forward guidance. And now they're mad that the market's not reacting to what they want the market to react like. So, I don't know. I think doing away with forward guidance, I think the point of that was for the market to behave the way the Fed wanted them to behave when they shocked them with things. It hasn't worked so far, but we'll see.
And Amit says, given where the market is, seems like the Fed had room to be much more aggressive with inflation.
Mm-hmm.
So,
well, I said this yesterday. Non-farm payrolls, unemployment rate, 3.5%. Full employment mandate, check. Phantom mandate, asset prices, up almost 50% from the June lows. I'm sorry, up above the 50% retracement, not anymore, but it got up above the 50% retracement from the June low. Equities handling rate hikes, check. What's left? 8% inflation, 6.5% inflation, or 6.8% inflation if you look at the PCE.
Hey, John, what do you mean? A lot of people think Powell will have a tone of bullish. What's your opinion? A tone of bullish?
Well, I think I'm going to interpret that the way that I think John A. means that a lot of people think that the Powell speech will end up being bullish, that he'll be balanced. And I don't disagree with that. I just hope it's not. Not because I'm positioned. I've got no positions right now. I have no position at all.
So, Christoph, what's up? Nobody knows how to get out of this mess that Europe is in today, I guess.
I talked about this the other day. A friend of mine that lives in the UK, upper middle class guy, and we might even call him lower rich, said that he used to pay about $300 to $320 U.S. equivalent to for the energy in his flat. It's up over $1,100 now. Crazy.
Sterling just joining, so you may have addressed this already, but will the $440 to $600 billion given away to student loan holders will greatly increase the need for more interest rate hikes? I mean, what's your take on that with inflation overall, Bob?
All right, so it's obviously it adds to inflation risks, but it's a pretty small number, really. We don't even know if it's going to happen, so I would not necessarily look at that as a driver of another 0.5% of inflation. but it's inflationary. Sure. I mean, if people are, first of all, people default on student loan debts all the time. But if people are like, needing to pay their student loans, they don't have discretionary money for something else, that eases demand and subsequently fights inflation. So the easy answer is yes, it is inflationary. And I said it on one of my TV spots today that basically fiscal policy is fighting the Fed between the Inflation Reduction Act, which spends money. So that's fighting the Fed, and student loan forgiveness. Number I heard was 300 billion sterling. I didn't hear 400 or 500. They bragged about reducing the deficit by 300 billion over 10 years, and then they take away 300 billion of revenue this year. One of the explanations I heard for that was, well, at the end of the year, people have to restart payments. So student loan payments have been delayed and delayed and delayed, and no one's had to pay them. Well, they're restarting it this year. So that means they're going to get that income in so they can afford the 300 billion, which is the same kind of argument as like we created, 11 million jobs, but 12 million were lost in the pandemic. It's the same kind of conversation. It's the same kind of garbage. It is the worst kind of spin. But at its core, it's inflationary, yes.
Feels like the Fed has a chance. What's left to get this under control before inflation is stuck, I guess, here and requires much higher rates later to get it back to target of 2%.
So Jan Hatzius, I've been on TV with Jan Hatzius before. He's a really freaking incredibly smart guy. And he is I think he's at Goldman. He used to be at Morgan. Chief economist at Goldman Sachs. He thinks the Fed's going to take the rate up to 5% and then pause for 2 to 3 years. So tell me that equity markets should perform well in that. I mean, again, we've had plenty of equity market rallies with Fed funds over 5%. It's not like it's never happened before. But there's an adjustment that needs to take place if that were actually the reality. This is not where stocks will be, and they won't be jumping to all-time highs if that's the reality. Not from here, George. So I guess I was wrong.
The fiscal and Fed needs to stop all these bills and measures and let the market work. Give it time to run the course of bankruptcies, job losses, and all this corporate debt bubble. Well, that's going to happen.
Johnny, I got stopped out of my Bitcoin longs, John.
I was going to get to that. John, did you close your Bitcoin long until 26K? I saw you tweeted something.
Yeah, I got stopped out of that. I tweeted that out. I got stopped out of it, but it was adjusted risk. I had actually moved my stop up as it wasn't behaving the way I hoped. So I got stopped out of that one. But I lost money, but not the full risk amount.
They are starting the student payments after the election, according to Paul.
Okay.
Yeah, I thought they delayed it again until January. That's what I read.
I heard December, which I think is the same thing.
Well,
I heard they start in December. You heard they delayed it through January.
No, until the beginning of January, so through December.
Through December, right. So I heard they restart in January.
And I saw that the 300 million was just for that 10K. When you take into account the Pell Grant, that was another 250 million. So we're sitting at 550 million. I mean billion. Sorry, not million, billion. So
say that again, Mike.
The just the 10K forgiveness was the 300 billion number.
300, right?
The additional, if you got that Pell Grant, so it can go up to 20K forgiveness, that was an additional 250 billion. So
I didn't see it broken down that way.
We were looking at 550 billion. I mean, this is just gonna, it's gonna, maybe get some votes from some people, but it's pissing off a hell of a lot more other people on both sides.
It's pissing off on both sides. I was telling Mike earlier, I went to what I would consider to be a more liberal news source, and they had a bunch of TikToker responses, and the vast majority of them said, thanks for nothing. Now, it wasn't those exact words, but they were like, this is really a drop in the bucket. Should have been more than this. You really let us down. Why not forgive all of it? It was unbelievable. It was unbelievable. As if they got, well, I think they got nothing for the money, but as if they, just completely expected this to be free. I'd rather see free college from start to finish than forgiveness of loans.
Yeah, and
By
for
the way,
all,
I'm not a fan of free college from start to finish. I'm a fan of colleges not absolutely raping their students and then giving them a degree that isn't worth that much.
and for all the people who paid off their loans and degrees and everything else, even recently, I mean, it's just like, okay, why do the right thing then? What? And now colleges are just going to keep their tuition hikes going. Oh, and people are going to think, well, I'll just get more degrees because they're going to forgive more in the future.
Yeah.
It's just they're opening up a very bad can of worms here, from my perspective. So, uh, let's see what else we got here in case Bob does disappear with the storms. George, Bob, I'm bearish, but this market is like Rocky, just eating one haymaker after another.
I don't know. I mean, again, if you expand this is an ES chart, Mike.
Yeah,
You expand this chart out, how good does the market look? I was watching an analyst from Deutsche Bank, and he said he did a calculation of buying every dip in this bear market, and you're down a lot of money if you did that. And
yeah,
again, like, look, again, guys, I don't care which direction the market is goes in. I really don't. My whole thing is that I don't believe the June lows hold because of the economic situation. I just don't. But it doesn't mean that I won't take a long position, as you guys know. I took a long position in ES, got to my target. Took a long position in NASDAQ. I got stopped out with my Bitcoin. The last two equity trades I had were equity futures, and I was long both of them. You just got to go with the price action.
yep. And like today, I took so much crap because we had a double bottom, and everybody's like, "That's gonna fail." And all right, well, it's the pattern. It triggered. You got the pullback entry, and then first, second, and almost third target hit. What do I
Did you
into a
point
clear
out
path
that
move?
said it was going to fail?
Yeah, I get oh that's oh see that's still the thing. It's not going to work out. You got to trade the price action, and you know what's good. See, here's a great thing earlier. Where was that?
Mm-hmm.
Who put that up here? Better than beer. I always have a hard time saying that. Snap withdrew guidance and shares tanked 40%. Well, GPS did the same and shares up 10%. WT. This is why you know what? I can't explain why the market does what the market does. I got to trade the patterns. I'm not smart enough to figure out why one tanks, why the other tanks. I'm not smart enough to figure out why. I mean, look at this. Besides, people are trading this as a meme stock now. Peloton earnings today reported negative $3.68 versus the estimate of 76 cents. They missed by 383%. Doji. I mean, and their revenue was abysmal too. They missed their revenue.
Well, this is one of the things about the fundamentals. Is like, okay, Snap withdrew guidance and they rallied.
They tanked.
They tanked. GPS. What did GPS do? And they
Withdrew their guidance. It's
obviously the market isn't moving on the guidance. There's something else going on. And this is the thing I've always said. It's like, look, I love analyzing the fundamentals. It's fun for me to try and figure out what I think the cause of something is going to be. But you don't know how people are positioned, how the market is positioned, and what the market expects to happen. I had a friend that used to say this all the time. He's like, "Oh, the earnings were great, but the stock's tanking. What the hell's going on?" Well, the market thought the earnings would be better. Well, how do I find out what the market thinks? I don't know. I have no idea what the market thinks. I see what the market has done, and we try to make predictions off of price action because it's obviously something more than just the guidance that moved those two stocks.
and you don't know. That's why I got to trade patterns. And sometimes people say and analyze this before the earnings. And if there's no pattern, it's somewhat of a crapshoot in this market, especially. I mean, Workday was just a very slight beat, and that's almost up what 10%.
Yeah.
But you have the things. You still have things that people like to trade, and another Workday again. What's the P to E ratio? Let's see. At least did they get They got to some positive earnings. But this is where we sit with. It really depends on the category it falls in. Just like all the people still trying to play Bed Bath and Beyond when they're going to declare bankruptcy at some point. Uh,
Yeah, Bed Bath and Beyond had a big pop because they hired a new bank to help them raise money.
well, they're also going to, they finance my inventory so I can take loans against it. Which the notorious cycle with that right before bankruptcy. You know what the
Yeah,
retail do.
and it's funny to me. I mean, this is again the same sort of. We were talking yesterday about the low float IPOs. It's like these are the same sort of things. These things will pop, but then they're not sustainable, and people don't know when that high is in. Most people, and
Yeah.
so it's not a sustainable way to invest.
Amit says, all I can say is I'm glad this channel. I am so glad this channel went. I think that was went from Tesla only to now pre-market and market overview and have some of the best macro and technical analysis. Saved a lot of us a world of hurt. Well, there you go.
That's a nice thing to read.
Sterling, I see student loan holders all the time here. Some owe 80 grand and didn't finish. Others, mostly doctors, have 250,000 plus and are deferring it so they can pay for their beach houses.
I think that's pretty common.
Yeah, and again, as us responsible people who paid off all the loans and grad school and everything else. Amit, thank you are welcome. Bullard suddenly wants more rates. Wants
Yeah,
more
he's
rate.
hawkish,
Yeah,
man.
he's really hawkish.
He's really hawkish.
I agree with you, Amit. I never understood why I have two homes. Seems like a lot of work.
I was actually so I briefly had two homes, and one of them was in California, and one was in Chicago. And I hated it because every time I needed to leave, I felt like I had to go to California. Anytime I needed a vacation, I'm like, well, I got the house, might as well go there. So dumped that because I was sick of being forced to go somewhere as opposed to go anywhere I want. Plus, going 4 times a year to hotels was cheaper than owning the house.
I can't keep the everything going with one house. I'd have to hire somebody to manage the other house, and then it would turn into a money pit.
Well, we
Uh,
did. It was Fritz. Fritz used to watch the house for us in Palm Springs.
Bob, sorry, not sure if you've covered this in the past. I'd like to hear your opinion on crypto in general. Surprised you played it, your logic for buying BTC or other crypto, or just see it as a trade.
It was just a trade. I actually traded it twice, both times from the long side. Made money the first time, lost money the second time. And as is our pattern, I made more than I lost. So overall, but they were just trades. I have a couple of theories on crypto in general, and one of them is, by the way, on my Twitter, I'll post my TD Ameritrade interview as soon as they send it to me, where I was asked about this, and I went through exactly what I'm going to go through with you guys, so you can review it there if you want to. Um, Basically, it's two things. The correlation between the Nasdaq and Bitcoin is broken down. It was as high as 0.93 when the highest I saw it. Might have been higher than that, but I saw it at 0.93. I've seen it as low as 0.33 now. I think part of the reason is because, and again, this is me enjoying my hobby, right, of trying to figure this stuff out. I think part of the reason is because a tech investor, someone who is like, I am all tech, I'm all in with tech, would probably be the same kind of person that would understand and or like Bitcoin as an investment. But when you've had an almost 30, I think it was a 29 or 30% sell off in the NASDAQ, a lot of that spare capital, that discretionary capital is gone. And so the NASDAQ's rallied a little bit, but probably not enough to generate discretionary capital to go back into Bitcoin. And I think that's why that relationship is broken down. That's number one. Number two, there's still regulatory clouds over crypto in general and Bitcoin specifically that have not been sort of sorted out, right? There's still US regulation coming. There's more EU regulation coming. Mining's been banned in a couple of countries. The regulatory regimes don't really know what they want to do with it yet. And I think that needs to be sorted out. And lastly, Tether and other stable coins, if there are any others, need to be sorted out. Well, that's not entirely true, Rich, because I can go back and show you periods of time where the dollar was strong and Bitcoin was strong. Look, for Bitcoin to be what it says it needs to be, sorry, Mike, I'm answering questions or commenting on things you didn't put up there. What Bitcoin and crypto in general needs to do is non-correlate. It shouldn't be correlated or inversely correlated to anything in order to be what it projects that it is, which is decentralized, right? A decentralized asset shouldn't really correlate to anything. It should correlate to itself, which it does. Everything correlates to itself, Mikey. But my last thing is, like, there's a lot of major economies, Russia and China, to name the largest, that are not accepting Western fiat, not paying in Western fiat as much as they did before. Now, granted, Russia was forced. China is choosing to use their own currency to buy commodities a lot now. Not every transaction, but some. It's going to be interesting to me to see if regulation gets sorted and Tether goes away, which I think we all agree is going to happen at some point. It'll be interesting to see what happens to crypto if a lot more major economies start shifting away from the dollar as their method of payment. This doesn't mean the dollar's not the reserve currency as long as things are priced in dollars. Obviously, we're always talking about crypto in dollars. You know, what's crypto worth? Well, $21,000. You know, so it's still the world's reserve currency, but there is, in my mind, an odd kind of a side base case for a long-term long in Bitcoin if it gets through these two major big crushing things that could happen to it. And I think, honestly, the biggest one is Tether. My stance is like Tether. Mike, I don't know what you think, but I think a Tether implosion could take Bitcoin down to 9,000.
Easily. The other stuff is, I mean, it's still, you have all these leveraged loans out there for the miners and these guaranteed rates of return. It's still sitting on a powder keg. I think it will finally blow on the next significant downturn in the markets. And then that's my thing. We need to get a lot of this flushed out. And even stuff like Coinbase in this country, you have Coinbase people working for them, literally trading, insider trading against stuff that Coinbase is actively listing. There is so much crap going on in crypto that has to be flushed out. And until we really get that done, and you have exchanges that are pure, complete fraud, but separate from that, that's why we really need to flush out. We need things like Tether to just go away. And why would you use Tether anyways? Because you can transact against the dollar. Yeah. Or you can transact against other local currencies, as long as that country permits it. So why would you ever use tethers? It's just somewhat marketed as an easy mechanism to go back and forth, but you're literally going to transfer. And this is the whole thing when Tether starts printing. Oh, we just got $1 billion print. Like some legitimate big player is going to transfer in $1 billion on Tether that won't go through an audit and that's under criminal investigation in multiple countries. Like, I'm going to transfer $1 billion to Tether. You got to be crapping me.
You must be crapping. Yeah. I just retweeted, by the way, my TD Ameritrade interview. So if you guys are interested.
Sterling wants to talk 10-year yields.
Yeah, so 10-year yields are interesting. Back above 3%, but struggling to get anywhere near the highs. If you go back to June 14th, the 10-year is still 46 basis points lower than the high settlement. And then again, we see the twos, tens inversion kind of messing around, right? We actually got down into the 20s. We had a 24 settlement on the twos, tens inversion. But we're back out to 32 today on settlement basis. So the 10-year yield to me is likely going to go higher regardless of what the Fed does. It'll just be the shape of the curve that matters, Sterling. So I think if the Fed doesn't go enough, I'm a believer that inflation has not peaked. We may be dipping, but I think it's going to come right back in because there's sticky parts of the inflationary curve. They're not going to go away. And by that, I don't mean the second derivative. Okay. I don't mean the second derivative is the change of inflation. So in other words, last month, the change on inflation month over month was 0. It was unchanged. Okay. The month before that, it was up. You have to go all the way back to 2015 to find 2 consecutive months of CPI that were negative or unchanged if you take the pandemic out. During the pandemic, we had 3 negative months of CPI. I don't think we're going to get 2 negative months in a row, and that's, to me, would be a peak, okay? Because now you're taking the CPI from here, and you're actually going like this, not just like this, or not just a flatter move up, right? So even a year-over-year inflation, which because of base effects, if you don't know what base effects are, we move up quickly in the CPI because it's an index, right? So the difference between here and here is a big number. But now we start going like this, and as we move across, I need to get my arm in the shot, as we move across the inflation curve and we get to this flatter area, the year-over-year inflation change automatically goes lower, but inflation is still going up. So that's the base effect. So the year-over-year inflation, the base effect is going to continue to creep down, but we could see it at 4.5%. That's still going to demand a 10-year higher than 3. Okay, because otherwise the 10-year note is net yield is negative 1%. So I think the 10-year note continues to go up. It's just a matter of when and what the shape of the curve is.
John asks, can we still be in a bear market even if the spiders will test the all-time high? Testing the all-time high is different from making a new. What's the official definition? What bear market's over when? Bob?
It's over when we make a new all-time high.
So can you test the high area without making all new and still be in a bear market? Yes. If you make a new high, you're not in the bear market anymore.
If you match the new high, you would be out of the bear market. How's that? If you get the exact number or higher, you're out of the bear market.
So, yeah, California Air Resource Board voted just to require all new vehicles sold in the state by 2035 to be electric or plug-in hybrid models.
Going to be so few people who can afford a car by the time that plays out. It's just unbelievable.
Oops, I think Bob's power went out. That's okay. By 2035, everybody in Cali will only be available to afford used vehicles anyways. Oh boy, I think Bob's power went out. Okay. Well, it's just Mike. Sorry about that, but we had a good session. I'll just get back. Yeah, Bob just texted crap. I think you see that up there. Oh boy. Oh boy. So that's where we sit. Peloton has lost $1.25 billion. I love the product, but seriously, $1 billion in 3 months. How do you do that? That's crazy. Again, as I said, I love the product too. I use it every day. But the company has been so mismanaged, and their overhead costs are absolutely asinine. Okay, I see this longer term still going down until somebody scoops them up cheap who's willing to do a complete reorg, but already has all the other infrastructure in place. Like somebody like maybe Amazon and says, hey, we want to get into the fitness game, or even an Apple who wants to round out their fitness stuff even more and say, okay, we're putting our brand on it. Peloton, you're now Apple or Amazon Fitness. We're going to take over all the infrastructure, everything else. I mean, think about it. Amazon. I mean, Peloton's got, with all those on-demand classes and everything, a huge presence for storage and everything else, fitting perfectly with AWS and everything else they could slap, and they could use all their infrastructure. Peloton already has to, they're cutting their own deliveries. They're going back to outsourced deliveries. They're cutting their own services team. They never needed showrooms. I mean, come on. So you have Amazon that could deliver the product, service the product, they have all these mobile people running around anyways. So it could be a great fit for something like that. It just has to get to a nearly a much lower stock price and do some reorg. But that's what I see long term. That was so mismanaged, especially with the pandemic. It's actually sad because the product is wonderful. A firm tanked after they beat revenues, meet EPS. Yeah, well, I didn't see their guidance. But look at don't worry about that. Start looking at their charge-offs and everything else. Let's see here. It said they missed earnings. They beat on revenue, but they missed earnings. And I'm expecting this lower over time anyways, especially once charge-offs keep coming up. NVIDIA is another good example. Horrible guidance and stock goes up. Look, we had a pretty substantial rally today, and one of the big things, people tend to go into this at the wrong times, but the semis, look at the semiconductors. Now, remember, I wanted to touch on this anyways, because I talked about what would I be looking for a short. I'd be looking for a short in semis. We had a little mini double. We never triggered the double top. We confirmed it, but never triggered. We actually triggered the double bottom here, and now we're rallying up. And why do you think I have the retracement levels on here? Because I'm watching for a top rollover pattern after it completes the double. And then if we trigger, timing with shorts is key. We triggered a double top, shorts. We even rally up in here and potentially reverse up in here between the 50 and the 62. Yeah. Did anything change with semis? No. It was all right, it's a beat up sector. Let's just buy it. NVIDIA's out of the way. That's why timing is so key more so timing with shorts rather than longs. Longs, you can get away with crappier timing a lot more so than you can with shorts. And NVIDIA, I'm just watching for the next rollover play. And NVIDIA still, potential double top still in play. And, their reverse guidance. But, hey, it doesn't matter. We're still in the weird markets. The go-go juice market of, let's just buy. Go back to the well of what brought us here. But this will roll over again. And it hasn't triggered the double top yet. That's why you got to be patient on these and let the patterns trigger. Where else do we sit? That's a sneaky smart of California. It will get housing costs down since everyone will be living in their EVs. Bob will have to see these on the replay. So yeah, long term, I'm also very bearish until we get the crap. Even from a technical, until we get the crap done. Is there potential head and shoulders building in the EP in the S&P on the daily? Yes, there is. Shoulder, head, shoulder. Now, interesting enough, that's the first thing I'm watching for within spitting distance of finishing that target. And remember your clear path move. Now, if we get the PCE numbers and everything coming out, you still got a clear path move. So what's the next major areas I'm watching? This will just roll into my S&P analysis. Well, through the double target, I'm watching 42.19, then 42.46. We get a close above 42.46. We could retest his highs and form a massive double top and kiss the. Remember, I've talked about this. We could theoretically kiss this 200 away again with daily cycles at the bottom. So, if anything, this is why I got to play the patterns. Now, if we finish the double, sneak up here in the 50.62 and then roll over hard, we got a potential really nice head and shoulders top. Breakdown pattern, as I said, I'm waiting for a bigger pattern to get bearish. That would be a much bigger pattern. We come even up here, though, and close above that 62.5 and hit the 87.5 and kiss the 200 away again, you have a potential double top. Then, if that triggers, I get into a major bearish mode or more substantial bearish mode. Until that happens, like today, as I said today, I went over into the open by a couple minutes, and I said, even on the open, it looks like there are some stop hunting moves. I think because if you stuck around, you heard me say that. You heard me say it looked like some stop hunting moves, and this was the stop hunting moves. And then boom, rally up, hitting that target again, little pullback, and then a launch mode into this afternoon. But it looked like they were doing some stop hunting just from my years of experience watching price action. That's where that came from. Again, the more price action you watch, the better you get at spotting that. NASDAQ. Again, first target, reactionary pullback. Second target, I'm considering that hit. By the way, I adjusted just for points of clarification. If you were tuning in this morning, here's the levels I cited: 31,116, 31,164, 32, 13,213. Once we really got going, I shifted these, and it only changed it by a hair. But I actually shifted it to the slightly more conservative target. That's why they're slightly different. So that gave me 31,115, and then 31,163 and 13,211. Now, going into a close, when you get that close to a target, I consider it hit. There's no way I'm going to try to eke out a couple. What was the high in that? 13,161, 50 versus 13,163. I'm not going to risk a pullback for $1.50 in the NASDAQ. You got to be smart about that going into the close. But continued up, next target, 13,211. Now, let me just jump back to this for overnight stuff. If we do pull back, your major support is this 4183 area. That's your major support. NASDAQ, your major support's coming in right about 13,072, and minor support about 13,115. Dow, which did not have a double, that's why I had these harmonics up there, is sitting at support 33,216, and then my next support level is 33,143. Russell, got to bump this up. First and second targets hit. Conservative targets on those doubles. Final target, 1972. Support, first level support, 1960. And then my more major support is about 1951. Just trying to get through some stuff. This is going on. We're getting close to an hour. DAX, double. Nothing changed. Double still valid on this. Still has to hit the first target. 13,386, 13,430, 13,475. Still stop reduction not hit yet. First level support 13,300. Then your major support coming in at about 13,219 to 13,230. Notes: there's an interesting trade today. Remember, against that 62.5, spike below, spike below, spike below, spike to it, spike below, and little double bottom triggered. You can see it really nicely on the 4 hour. And that's another tip. If you're questioning whether it's still valid, yeah, this is still valid, and go up to a higher time frame. If you still spot it nicely in that higher time frame, it's still tradable. This is virtually first and second target hit. As close to that got final target 117.29 and a half. Does this take it yet to a bullish resumption? No. Crude, nice little topping reversal pattern off that 200 with daily cycles rolling over. So we'll get more for a pullback level. We start breaking below today's low. Natty gas, not much going on. Gold, not much going on there. Euro, somewhat of a flag pattern here. Still not triggered that double. And not yet turned into a triple. We need another push lower. Confirmed a double, but not yet triggered. That's why you got to wait for those triggers. Bitcoin, just holding here. Even on a little pop move back up here is just still another corrective. It's almost a channel flagging pattern. It's very sloppy, though. And remember your daily rotation zone. You're already stopping out at or holding against the 8. So even if it pops, you're into the daily rotation zone for another rollover. Tesla, surprising it didn't get its a go-go juice on from the split. Maybe it's losing its mojo. Again, no close above that 62.5, and the double still not invalidated. Still holding that daily rotation zone. Daily rotation zone still holding, so it's got to trade below today's low before, and then close a little lower before we really get the bearish move on, but the double's still in play. We'll take a look at that tomorrow morning. It's pretty much where we sit. So I answered that Head and Shoulders. I disagree. They've got a very strong user base. And they're cutting the price on their bikes again. Again, somebody else that's got, some solid things could do something with it. Yeah. See, this probability wise still favors some higher prices unless we can really break back down below the 62.5. So Pan W Snow Gap Fill wouldn't be targeting it yet. You still got cycles going up. I mean, yeah, long term, but there's no short term sign that you should go short. There's no reversal pattern yet. I mean, right here you got another gap. So if you're talking this gap fill, yeah, you could easily do that little. But the major gap fill, not yet. Not unless the markets start tanking. Again, be patient with these. This would be another one. I would not target the gap fill yet. Snow, pretty much. Did it close? Yeah, it eked out a close above the 62.5. So if the market continues, this could easily retest this 200 area. So would I be shorting it yet? No. Have to, and this would not even be a break below today's low. Besides the gap fill harmonics, I need it to get below this key gap reversal open. Do I see the NASDAQ retesting the 200-day moving average? Well, the NASDAQ didn't. The NQ did not test the 200 yet. So, and by the way, this would have to be traded as a horizontal head and shoulders pattern. Ask me that if we close above the 62.5 of this retracement. But even the 62.5 doesn't foretell. Now, if we start getting the rip your face off rally off Powell tomorrow, yeah, then it's very possible we retest this high area in all the markets. Now, for the NASDAQ to get to the 200 is a different story. I'd be more looking for the S&P to retest its 200 before the Nasdaq hit its 200. Have a great night, Daniel. All right, it's been a long day. You have a great evening, Christoph. Again, we should wrap this up. It's going on an hour. Thank you, everyone. It sounds like Bob will be on tomorrow morning after the PCE numbers. Remember, they an hour before the open. 1 hour before the open, the PCE numbers. Do not get caught off guard by that. Please join us. I will be on at 8, so 30 minutes after the PCE, I will be on, and hopefully Bob can join us for a quick discussion there. And then we will also do our pre-market prep going into Powell's, but we'll have one major thing out of the way. So that will really give us more of a clear roadmap going into Powell's speech. Everyone have a wonderful evening. Thank you for tuning in. Come back, leave some comments. Bye for now.